Hey everybody, welcome back. Now today we're going to be doing a deep dive on Avalanche. Now, like Cardano, Polkadot, and Solana, Avalanche is rapidly establishing itself as one of the most promising smart contracts blockchains. In fact, the AVAX price is already up 100x since the Avalanche mainnet launch in September 2020. Now, if we look at the Avalanche white paper, it declares it to be an ideal platform for payments, staking, and decentralized exchanging, pitting it against the likes of Ethereum and Cardano. Roadmap-wise, it's been full steam ahead for execution. In the space of 5 months in 2021, we saw 2 decentralized exchanges, Pangolin and SushiSwap go up. We saw support for USDT stablecoins, MetaMask wallets, and Chainlink for its smart contracts. And then in August, Avalanche announced a massive $180 million DeFi initiative called Avalanche Rush, partnering up with Aave and Curve Finance, 2 out of the 3 biggest platforms in the DeFi space by total value locked. Now this caused the AVAX price to explode, quite similar to how the Polygon Matic price exploded in March after they announced their own partnership with Aave and Curve, as everyone is itching to get away from Ethereum's ridiculous gas fees. Now technology-wise, just like Cardano, just like Solana, we've got a really good balance of security, decentralization, and scalability. Performance-wise, we've got 4,500 transactions per second on each subnet, with sub-second finality. In other words, Avalanche is both high throughput and low latency. In contrast, Ethereum supports around 15 to 20 transactions per second, with a finality time that's around a minute. Right, so that's a great performance from Avalanche. But what makes Avalanche really interesting is that it introduces a new family of consensus protocols that combines the best parts of the existing 2 families, the classical and the Nakamoto family. And this elevates Avalanche high on the list of the most exciting crypto and blockchain projects out there. Just ask some of the other pioneers in this space. Ethereum founder Vitalik Buterin thinks that Avalanche has similar levels of legitimacy to Bitcoin, has genuinely interesting tech. Cardano founder Charles Hoskinson thinks that there are some genuinely interesting ideas there. Now, this video will offer something for everybody. We're going to deep dive into what makes Avalanche special and how its breakthrough consensus protocol works. We're going to look at how to get started with DeFi on Avalanche, and that includes how to transfer some money from an exchange over to your MetaMask wallet. And of course, we're going to look at price predictions. If this sounds interesting to you, feel free to give me a like and a subscribe, and let's dig in. Alright, so it helps to start the conversation with Bitcoin and Ethereum. Now, Ethereum's scalability issues and woeful gas fees notorious. They're driving DeFi users elsewhere, whether that's a layer 2 solution like Polygon or other blockchains like the Binance Smart Chain. Meanwhile, if we're looking at Bitcoin, right, then to make it work as a scalable payment system, for example in El Salvador, a layer 2 scaling solution such as the Lightning Network, well, it's a must. But Avalanche, like Cardano, like Solana, ticks all the boxes as a base layer protocol. Decentralized, secure, scalable, right out of the box, just like the other premier competitors, Cardano, Solana, and Polkadot right now. But you see, Avalanche's appeal goes deeper than this, right? It goes deeper. Avalanche is considered by some to be a major breakthrough in consensus protocol technology. Now, what do I mean by that? You see, in 50 years of distributed systems research, we've had just 2 families of consensus protocols, the classical and the Nakamoto consensus protocols. 50 years, just 2 families. And then in 2018, Avalanche came along. Now, what exactly is a consensus protocol? Well, distributed systems, which includes blockchains, includes large databases, historically, they require agreement between sets of machines. How do you get different computers on a network who don't trust each other to achieve agreement? Well, that's what a consensus protocol does, and it lies at the heart of any blockchain. Now, classical protocols. So this family came from the 1970s, and it achieves consensus through quorums, which required voting, right? So classical protocols, they use a voting system. And basically what happens is a transaction is proposed and then voted to be accepted or rejected by the network, right? Whether that's a large database or a blockchain network. Now, these classical protocols, they relied on every node in the network talking to every other node. Now, this all-to-all communication ensured that all the computers in the network reached the same decision with certainty fairly quickly. So that's low latency. Okay? Or to put it another way, the network had a quick finality time for transactions. Right. Now, classical protocols were also fast, high throughput, right, supporting a high number of transactions per second. So historically, these protocols, they played an important role for industrial uses, such as large databases. So here, by transaction, I mean, as for instance, SQL queries. So these large databases supported a lot of SQL queries that were executed quite quickly. Right, so that's the classical consensus family of protocols. And then we had a major breakthrough in 2008. Bitcoin introduced a new family of consensus protocols known as the Nakamoto consensus protocol, which basically is a combination of two things: proof of work mining and the longest chain rule. And Ethereum uses this protocol too. So here, instead of voting, consensus was reached by choosing the longest chain. And miners were competing to write blocks in the chain by solving difficult cryptographic equations, right? So this is called proof of work. It was actually an ingenious system with an ingenious incentive structure that incentivized nodes in the network, so that is the miners, to do the right thing because they had committed effort, right? Effort in the form of work, solving cryptographic equations. Similarly, for proof of stake, validators are committing effort in the form of their stake, incentivizing them to behave. The Nakamoto consensus had extra benefits as well, right? So Bitcoin, Ethereum, Litecoin, Dogecoin, and so forth that use this consensus model, they are highly decentralized and they're robust, right? Because anyone can participate in mining. All I need is a decent computer and electricity, and I can join the network, right? And the network wasn't disrupted by the mining membership fluctuating around people entering and leaving, right? So open and dynamic networks. And then in 2018, Avalanche, also known as the Snow family of consensus protocols, they were introduced into the world. Now, how does this work? Right? How does the consensus protocol work? Well, it works through repeated sampling of the network. Right? So here, each validator node, for instance, one of these dots for illustration purposes, it basically polls a small randomly chosen set of neighbor nodes. So here, they're the ones circled in red. And then that sample votes on a decision. And then this polling repeats over and over again, each validator asking a bunch of neighbors what their preferences are. And the sampling is continued until convergence is reached for the entire network and a final decision is made. So here is a simulation with more nodes. Now what's great about this is convergence is actually fairly quick, resulting in a fast finality time of typically under 1 second. Right? No need to wait a minute for Ethereum to reach finality. No need to wait 1 hour for Bitcoin to reach finality. Avalanche has sub-second finality. And quick finality, in other words, low latency, is very, very important for payment systems, right? For example, with Bitcoin, 1 hour finality time without a layer 2 scaling solution like the Lightning Network, there's a chance that within that 1 hour, your transaction could be reversed, right? You don't want that to happen. So essentially, Avalanche grabs the classical consensus model, right, which is based on voting, and improves upon it. Now, also with regards to security, there's no hard cliff where the network becomes compromised, right? So you see, on Bitcoin and Ethereum, if 51% of the miners turn rogue, the network is compromised, right? Transactions can be reversed, double spending attacks can be made, and so forth. It's game over. With Avalanche, if the attacker ends up with, say, a 51% stake, it means there's just a slightly higher chance of an attack succeeding rather than guaranteed. Right. So Avalanche has a probabilistic rather than a deterministic safety guarantee. Alright, so in summary, Avalanche combines the benefits of the Nakamoto family of consensus while retaining the benefits of the classical model. Quick finality, right? Speedy. Oh, and energy efficient too, because the clever developers have built in a low power mode, right? For when there's not much happening on the network. For proof of work mining, you always have this considerable energy overhead for maintaining the network security, whether it's busy or not. Alright, a quick review of Avalanche's history. So the Avalanche Consensus Protocol was introduced in a 2018 white paper by an anonymous team called Team Rocket, right? Anonymous, just like our friend Satoshi. 24 hours later, a computer scientist, Emin Gunsira, picked it up and then retweeted it. And then shortly afterwards, Team Rocket made a Twitter account, and thus began a collaboration between Emin and Team Rocket. In fact, Emin and his team then helped Team Rocket revise their original paper and release a new version in 2020. So Emin probably knows who Team Rocket are, who the people inside the team are. In fact, some speculate that Emin might have been part of Team Rocket to begin with. So to summarize, the general understanding is that Team Rocket came up with the Avalanche Consensus Protocol, and Emin is the founder of the Avalanche blockchain, that is based on the Avalanche consensus protocol. I hope that distinction makes sense. It's just like how Bitcoin and Ethereum, they're based on the Nakamoto consensus protocol. Here, it's a bit more confusing because the blockchain/platform and the consensus protocol are both called Avalanche. Now, the Avalanche mainnet was launched in September 2020, and the pace has picked up pretty quick since then. In early 2021, Avalanche released Pangolin, a decentralized exchange or DEX on the Avalanche ecosystem. And just like the popular PancakeSwap on the Binance Smart Chain, and in fact many DEXs out there on various blockchains that's compatible with the Ethereum virtual machine, Pangolin is essentially a carbon copy of Uniswap. And then a lot of things fell into place shortly after, right? Starting with SushiSwap that came to Avalanche, another popular decentralized exchange from Ethereum. In May 2021, Avalanche began supporting USDT stablecoins. In June, MetaMask wallet support came, right? So that made it easy for the majority of existing DeFi users on Ethereum, on Polygon, on the Binance Smart Chain, right, to come over and taste test Avalanche and its deliciously low fees of just 5 cents. In June, we saw Chainlink integration. So now quality data could be brought into Avalanche smart contracts using the crypto market's leading oracle. And then we saw the really big news in August, right? Avalanche's massive 180 million DeFi initiative called Avalanche Rush, which is going to see DeFi users being able to use Aave and Curve finance on Avalanche. Now, this is a huge deal because Aave and Curve, right? They are 2 out of the 3 biggest DeFi protocols by total value locked. And it's important to note that this is straight out of Polygon's playbook, right? This is exactly what Polygon did in March. Back then, not many people cared so much about Ethereum's layer 2 scaling solution, Polygon. But they introduced their own version of Avalanche Rush, onboarding Aave and Curve finance. And shortly after, Polygon Matic prices absolutely exploded as DeFi users began buying up Matic in mass for the usual DeFi activities, staking, farming, lending, and paying gas fees. So very smart move by Avalanche, right? That's going to incentivize lots of people to want to come over and use Avalanche for DeFi and also buying up more AVAX tokens. Alright, for those of you currently using a Web3 wallet like MetaMask, for DeFi on Ethereum, on the Binance Smart Chain, or on Polygon, let me show you how to get started on Avalanche. So firstly, you'll need to set up the Avalanche mainnet on your MetaMask wallet, which is something you did when you set up the Binance Smart Chain or Polygon with MetaMask. And so you grab the settings and you put it in your MetaMask settings here, and that's it. Second, you'll need an Avalanche wallet because that's going to act as kind of like a conduit or portal between the exchange where your funds are and your MetaMask wallet. And this is something that's very quick to do. Go to the Avalanche wallet site, create a new wallet, and then generate a new key phrase, and you'll get a 24-word C phrase, and that's all you need to log on to your wallet, and off you go. Alright, so now you're ready to move money from an exchange like Binance or Coinbase to your MetaMask wallet via the Avalanche wallet that you just created, right? So that you can start using Pangolin, SushiSwap, and soon Aave and Curve for some fantastic DeFi opportunities. By the way, this and a lot of the other diagrams I've been using in this video, along with the price prediction data, that is in my Avalanche blog article, which I will link down in the descriptions below. Now do note that moving your crypto from an exchange to Ethereum or the Binance Smart Chain is a simple, direct affair, but onto your MetaMask for Avalanche, you have to go through the Avalanche wallet, so it takes a few more steps, but the rest of this section, we're going to look at how to do that. Okay, so let's say I wanted to move one AVAX from my spot wallet on Binance onto MetaMask, then that one AVAX is going to first jump onto the X chain in our Avalanche wallet. That's then going to hop onto the C chain. And then finally, we can move that out of our Avalanche wallet onto MetaMask. That's how it's going to go. All right, so I am at the withdrawal page on Binance. I've pasted across my X chain wallet address, which I got from my Avalanche wallet. I'm transferring across one AVAX, and Binance is charging me 0.01. And that includes a very tiny fee, a gas fee, AVAX gas fee of around 5 cents. The total fee ends up being around 50 to 60 cents. Most of that is going to Binance. Withdrawal. And then I just have to authenticate the transaction via an email code and also a phone code. Alright, so that's gone through, and very quickly afterwards, I have roughly one AVAX on the X chain inside my Avalanche wallet. I'm then going to go to cross-chain where I can transfer that roughly one AVAX from the X chain to the C chain, right? So I'm going to transfer everything across. Notice that I've got to pay a little bit more gas fee to do that transfer. 0.002 AVAX, that's very, very cheap, roughly 5 cents. Confirm. Transfer. And once that's done, I've got my AVAX on the C chain now, which I can then go to send and move that out of my AVAX wallet onto my MetaMask wallet address. Alright, so here's my MetaMask. I'm going to copy the wallet address down. I'm going to paste that down here. And then I'm going to transfer the full amount from my C chain. Confirm. Send transaction. And the gas fee, notice very, very cheap, only 4 cents. And then a few moments later, voila, my AVAX is now on MetaMask, ready to use on any DeFi protocol that takes your fancy. Now, I do plan to make a dedicated video for Avalanche DeFi, but in the meantime, just quickly, the reason why we have this detour from exchange to X to C chain, and then finally to MetaMask is Avalanche actually comprises a trio of blockchains: the X chain, the exchange chain, the platform chain, and also the C or the contracts chain. Now, the X chain is the closest to centralized exchanges, which is why you end up moving your funds there first. And the C chain basically is their smart contracts chain, right? It's based on the Ethereum virtual machine, and it is the chain that you need to be on in order to connect to EVM-based wallets, right, such as MetaMask. And also be aware that I've shown you the standard way to route funds across. You can take shortcuts depending on which exchange you're working with. So for example, on Binance, you can actually move straight onto the C chain, right, which allows you to bypass the X chain. And again, I'll make a dedicated video on this sometime. So we'll leave it there for now. All right, so half of you probably skipped straight to this section, the price predictions. Now, before we go any further, we do need to quickly discuss tokenomics, because tokenomics dictate the rules of the game for long-term price action. Now, by the way, all of the figures and tables that I'll be using are in my AVAX blog article, which I will link down below. All right, firstly, AVAX has an aggressive vesting schedule, right, which is something to watch out for. There are a good number of AVAX tokens which are yet to enter the circulating supply, right? So initial buyers who bought AVAX for less than 50 cents are having their AVAX tokens progressively unlocked, and this increases the supply and sell side pressure, as these early investors who are now up 100x are going to be taking profits. Now, don't be too scared, because the vesting schedule was the most aggressive for the first 12 months, right, after the mainnet launch, which has now passed. So we're now in the phase of the vesting schedule where the rate at which the tokens are being unlocked is at a slower rate. So, in summary, the vesting schedule will put downward pressure on prices, because as the tokens get unlocked, the circulating supply is going to go up, which means downward pressure on price. Okay, assuming the market cap holds steady. Now, on the other hand, AVAX is deflationary, which is bullish for price action, right? There's a maximum supply of 720 million tokens. And at the same time, AVAX tokens get burnt for all sorts of operations on the network, right? And this includes the burning of transaction fees. Now, this is quite similar to Ethereum after the London hard fork upgrade, right? Where developers overhauled the fee structure and introduced a base fee for all Ethereum transactions that's immediately burned. I've got a dedicated video on the London hard fork and what it's going to do for the Ethereum tokenomics, and I'll link that up below. Now, while I'm here on a diagram of Bitcoin, one myth that is important to debunk is that Bitcoin is, strictly speaking, not deflationary, right? Its circulating supply is still going up, right? Which means it's inflationary. It's just that the rate of inflation is slowing down towards zero, right? So meanwhile, Avalanche and Ethereum, they are going to be true deflationary tokens. All right, so in summary, AVAX's vesting schedule increases the circulating supply, right? Putting downward pressure on prices. But this is counterbalanced by AVAX being a deflationary token, which is going to help reduce the circulating supply, which is going to help the prices go up. All right, with tokenomics out of the way, let's look at some prices for AVAX. Now, like I did for the Solana video, which I'll link above, I'll briefly discuss 3 sensible approaches for predicting where the AVAX price might be by the end of this market cycle bull run, which could be fairly soon, right? Or it could be sometime as late as the end of even 2022, if you believe in expanding cycles. Now, in short, these three approaches are based on predicting the future market cap of AVAX, predicting what the future AVAX ETH valuation is going to be, and predictions using market share and market dominance, right? So basically predicting the future market dominance of AVAX versus, say, Ethereum. Now, the reason we typically use ETH as a bit of a reference point is, well, firstly, Ethereum is the de facto smart contracts leader against which other layer ones are typically benchmarked. And number two, ETH serves as kind of like an index for the entire altcoin space, right? It's a useful reference point, right? Similar to how the S&P 500 serves as like a benchmark or index for the performance of the American economy, or say how NASDAQ serves as a benchmark for the tech sector or growth stocks. All right, so here's a simple argument based around market cap. The current crypto market cap is around $2 trillion. I predict it's going to go to, say, $10 trillion by the end of the market cycle. Now, this is generally regarded as a standard or a normal target, right? So not too bullish, not too bearish, kind of like the Goldilocks mid-ground. Now, 10 trillion means a 5x from here. Right now, if AVAX maintains its current market dominance, that means the AVAX market cap is also going to go up 5x, and the price is also going to go up 5x, assuming the circulating supply doesn't fluctuate too much, which it might. And that gives us a price of $350 per AVAX. You can then tune this for your level of bullishness or bearishness, right? So for a more bearish scenario, we might project the total crypto market cap to go to, say, just $5 trillion instead of 10, right? And in that case, we end up with an AVAX price of 175. For a more bullish scenario, we might project a massive $15 trillion blow off top, right? Just saying. And that will give us an AVAX price of over $500. Now, there are two caveats I want to mention. So firstly, we do know from the tokenomics earlier that the AVAX circulating supply is potentially increasing, right? You've got the token unlocking, which is somewhat offset by the token burning. Now, for these calculations, I have kept things simple by assuming that the circulating supply does stay constant at 220 million tokens, right? So just be aware of that. What it means is that if we do hit these market caps fairly soon, then no worries. But if the bull run continues for, say, another year, when there might be, say, 300 million AVAX tokens instead of 220 million, then these prices here will have to be updated to reflect a more saturated market. All right, second caveat. I talked about blow-off tops earlier, but different parts of the crypto market do pump at different times, right? This is called the crypto money cycle, and I've got dedicated videos on that, which I'll link above and below. Now, generally, we expect Bitcoin to peak first, with the altcoins peaking later, right? So what this means is that when the total crypto market cap hits $10 trillion, or whatever total market cap you're betting on, then AVAX, in all likelihood, it's not going to hit its own market cap peak until a little bit later, right? But all good, right? These arguments based on market cap are ballpark estimates anyway. Not a major issue, but it is something to be aware of. All right, so that was the first approach, the simplest one, using just market cap. Now, the second approach is projecting where the AVAX ETH valuations will be by the end of the cycle. So this is a favorite. This approach is a favorite for traders and investors, partly because you can see the AVAX ETH valuations quite easily in chart form on, for instance, TradingView. So right now, the price of one AVAX is approximately the 2% the price of one ETH, right? $70 price of one AVAX divided by the price of Ethereum, $3,500. 70 divided by 3,500, roughly 2%, right? So the AVAX ETH valuation, that's going to be roughly 0.02, right? As you can see here on TradingView. Now, assuming the crypto market cap goes to the normal $10 trillion target, right? Now, if we maintain the AVAX ETH ratio, the current AVAX ETH ratio, then we end up with our usual price target of $350. But the real benefit of using the AVAX ETH valuation as your foundation for prediction is that you can calibrate your level of bullishness or bearishness based on how you feel AVAX will perform relative to the smart contracts leader Ethereum, right? So for example, if you feel quite bearish about AVAX, then maybe by the end of the bull run, you might want to argue that the AVAX ETH valuation will drop down from 2% back down to 1%, right? So the price of one AVAX will be 1% the price of Ethereum. Then that translates to a price of 175, right? So maybe you feel like this will happen because you think AVAX might run into roadmap issues, Or perhaps you feel like Ethereum 2.0 is going to cause a massive amount of investor interest, right? Which causes AVAX then to grow at a slower rate than Ethereum. On the other hand, if you feel quite bullish about AVAX, then maybe you might argue that the AVAX ETH valuation could rise all the way up to say 5%, right? In other words, the price of one AVAX token ends up being as high as 5% of one ETH. Maybe you feel this might happen because of the really bullish news about Avalanche partnering up with Aave and Curve Finance, right? Now, in this situation, the price of AVAX goes up to over $800. Right, that would be really wonderful, wouldn't it? All right, finally, the third approach, which is actually quite similar to the second approach, and that's arguments based on market share or market dominance. So here, based on how bearish or bullish you feel, you're going to project how much market dominance AVAX can capture relative to Ethereum. Now, this actually makes more business sense. Okay, it makes more business sense. For example, it makes more sense to say, well, AVAX's market cap is currently 4% of Ethereum's, and I think things will stay that way. That makes a good amount of business sense. Rather than to say, robotically, I believe that the ratio of the price of AVAX to Ethereum will remain at 0.02. Okay, now this is actually harder to understand, even if the math for both approaches end up working out quite similarly. Alright, so let's go through an example to bring this home. Let's walk through the bullish price target case using this approach. So right now, the total crypto market cap, as we spoke about earlier, is around $2 trillion. And interestingly, 20% of that is in Ethereum, $400 billion, right? And 0.8 of that, roughly $15 billion out of the total 2 trillion is in AVAX, right? So what that means is that the relative market share, right, or the market dominance of AVAX to Ethereum is 0.8% divided by 20%, or $15 billion divided by $400 billion, whichever calculation you prefer, and that's 4%. Okay, in other words, AVAX has 4% the market cap of Ethereum. Now, the predictions. Let's say the crypto market cap goes to $10 trillion as usual, but I'm feeling really bullish on AVAX. In fact, I feel that AVAX can capture as much as 10% the market cap of Ethereum. Now, if Ethereum's market dominance remains at 20%, that means AVAX's market dominance must have actually gone up 2.5 times, from 0.8% to 2%, right? That's the only way the market share goes from 4% to 10%. That's 2.5 times more. Right, that then translates to a market cap of $200 billion for AVAX, which then works out to be $875 per AVAX token. Right, so I hope that made sense. That's how it works. You start from the market share to working out what the AVAX market cap is going to have to be, to working out what the price must be. Now, this approach has the most calculation, but it also makes the most business sense because you're starting with something that makes tangible business sense, market share. All right. In conclusion, AVAX is no doubt one of the most competitive layer 1s out there. The white paper positions Avalanche as the place to be for payments, for staking, for DeFi. Avalanche is a high-performant blockchain, 4,500 transactions a second, with sub-second finality, so you have high throughput and low latency. Avalanche is decentralized and it's secure. It already has 1,000 validators, and its novel Avalanche consensus protocol provides a probabilistic rather than a deterministic safety guarantee, which makes it far more immune to 51% attacks. In fact, Avalanche is immune to a range of attacks that other blockchains such as Bitcoin and Ethereum are not. Now, as blunt as this sounds, Avalanche is ultimately a jack-of-all-trades blockchain. Right? It doesn't really score the highest marks in any of the key qualities of a smart contracts blockchain. In terms of performance, it's very fast, but it's not the fastest. That goes to Solana by far. In terms of decentralization and security, well, Cardano and Ethereum still takes the cake, respectively. What about interoperability? Right, so Avalanche's use of subnets, which I didn't really get time to talk about earlier. All right, so this allows different consensus protocols to be mixed together. Right? It's quite novel, and it's great for blockchain interoperability. Imagine being able to spin up several subnets, right? One running proof of work and one running proof of stake. Fascinating. But the king of interoperability is still Polkadot. That's its niche. With all of that said, Avalanche still offers a terrific balance between all of these important qualities. Performance, decentralization, security, interoperability, and that's not an easy recipe to get right. Alright, if you enjoyed this content, I'd appreciate a like and a subscribe. Looking forward to seeing you in the next one.